I have a topic today that is near and dear to my heart. I'm not going to go through the whole thing. It's actually in my apartment training program. I think it's like a 4 hour training on how to understand multifamily financial statements better than your accountant. And it's one of my most favorite topics. And the reason why I came up with that topic name was many, many, many moons ago. My accountant and I actually shared office space, and he did all the accounting on my properties. And one day I'm looking at a trailing 12 financial statement, and I walk in. I'm looking. I'm like, look at the loss to lease on this property. It's crazy. It's huge. It's ridiculous. So I walked into his office, and I said, Jeff, look at the loss to lease that we have on this property. And he looks at it and goes, yeah. I said, I mean, isn't that amazing? Yeah. I said, what do you mean? You're acting like you don't even know what loss to lease is. And then he proceeds to tell me the textbook definition for loss to lease. I said, yeah, but what does that mean as an owner operator, as a manager of the property? What does that mean? And he looks at me and he says, it means this. And he proceeds to give me the definition of loss to lease. I said, but you have no idea from a managerial standpoint what that information tells you. He goes, no, what does it tell you? And I had to explain to him why I thought it was crazy how big it was, and how, as an owner operator, what you have to look out for to protect yourself against this crazy loss to lease number. And then I realized that he's a phenomenal accountant, but he doesn't understand how to use the information that is given to you in every trailing 12 financial statement to your advantage. You see, accountants, or people who understand numbers, can look at the numbers and understand the living being that is that property just by looking at the numbers. And that is what you will have to be able to do as you grow in your desire to be an owner operator of a multifamily property. So I'm going to give you 3 tips just to get you started in understanding the trailing 12 financial statement for a multifamily property. Number 1, the first thing you want to always understand are the dates. You see, an income and expense statement is not a snapshot in time like a balance sheet is. An income and expense statement shows you how the property lives over a time period. And the income and expense statement has 2 categories: income, expenses. Okay. And the tricks that the sellers will try to play on you is that they'll set the time limits differently for the income than the expenses. So if you're looking at a multifamily income and expense statement, the first thing you want to do is understand the dates that are being reported. You want to make sure that the income time period is the exact same time period as the expenses. Now, you might be thinking to yourself, what, are you kidding me? How the heck could it not be the same time period? I'm telling you, the income could be abbreviated. They may say, oh, we're only going to show you what the income was for the last 3 months, but we're going to multiply it by 4. So it's really like looking at 12 months. Huh. Okay. Why would you do that? Well, because we went through a massive lease up, and 12 months ago, our income was terrible. But now we're at 100% occupancy. So that's what you should base it all upon. Okay. Tell me, what about the expenses? And they say, oh, we're going to show you a T12. They call it T3 and a T12. We're going to show you a T12 for the expenses. So you're going to show me the last 3 months of income, but the last 12 months of expenses. Yes, yes. Okay, now tell me why you're going to do that again. Well, because like I said, 12 months ago, we had no income. Oh, so you probably didn't have much in the way of water and sewer and electricity and gas and trash removal, pest control. Those expenses were probably really low also, right? Yeah, yeah. So you're going to show me that 12-month window and you take all those really low expenses and watch them build up, and then you take an average, and boy, that NOI looks really good. No, it doesn't work that way. I mean, only in multifamily accounting are you able to pick and choose the time frames that you get to report on. Can you imagine? I had a great year last year income wise, but I had a lousy year expense wise. I spent a lot of money. I made a lot of money, so I spent a lot of money. But back in 2010, I wasn't doing that well income wise. So I didn't spend all that much. I wonder if I could take the income from 2010, which was very low, against my expenses for 2022. I'll send that to the IRS, and that's how we'll figure out what my tax liability is. Can you imagine doing that? Can you imagine your accountant letting you do that? The both of you would be in jail. But for some reason, in the multifamily world, it's okay. Hey, we'll take this over here and a little bit of this over there. No, always understand the time periods that you're looking at when you're looking at a financial statement. That's key number one. Now, the second thing I want to teach you is that your accountant, some people think, oh, he's a CPA. Yeah, okay, he's a CPA. What is he, like, wicked good at math? Like he knows addition, subtraction, multiplication, and division better than anybody? No, they don't. They don't know anything more as when it comes to numbers. They can't do calculus. They can't do algebra 2 and trig. They can do multiplication, division. So why do they get these 3 letters after their name that gives them so much power in the financial world? Because they know one thing better than anyone else. They know how to account for the numbers. Oh, Charlie, no, I'm serious. Here's what I mean. They're able to take those numbers and put them into categories that tell a story. So the second thing I want you to be able to do when you're looking at a trailing 12 financial statement is look on the left-hand side of the page where all the categories are. And I want you to get used to knowing what all the categories for a multifamily property should be on there. Okay, so if you're doing an accounting, an income and expense statement for a computer company here, well, you're not going to have a loss to lease category. That would make no sense. There's no story to tell there. But I'm telling you that when you are looking at multifamily, putting that loss to lease figure in there tells a story about what's happening on that property. That's why these accountants are so good. They can if you look at those categories and you know what they mean from a managerial standpoint, then wow, this is a good property, or wow, this is a terrible property. All right, so that's the other thing. Get to know those categories. Let me give you an example. I was looking at a trailing 12 financial for one of my students the other day, and one of the major categories of multifamily is general and administrative. That's where you throw your cell phones. That's where you throw your copiers, your paper towels for the office. General and administrative. And their G&A number was huge. Well, let's take a look at the categories. What's going on in these? Wait a minute, property management under general and administrative? That's not right. Let's carve that out. Why are they trying to hide it in there? I don't know if they were trying to hide it, but it doesn't belong there. But once you understand these categories and what they mean, then okay, like another example. If we look at the income section, it starts off with the gross potential income. That's the amount that this property could generate if it existed in Never Never Land. That's where they get the maximum rents every month, 12 months, no one's late, no one's vacant. That's the gross potential rent. Then you come off of that by using categories that I call income reducers. And then you come down with the gross collected rents. That's what we actually put in our bank account for the rents. Below that category is a category called other income. That's where all the other places that we make money on the property that is not rent. Laundry income, pet deposits, all those types of things. Now, you look at that other income, and you have to be able to discern, and I teach my students this, what other income is good income and what other income is bad income. Bad income? Charlie, I've never turned down 20 bucks. That's not bad income. Every income is good income. No, because in multifamily, we capitalize that income. We multiply or divide it by a factor called the cap rate that makes the value of the asset higher, and therefore we pay more for it. But if some of this income is not stable or is income that we don't expect to get on a regular basis, that's bad income. And my children should not be paying his children for that bad income because he's a bad manager. Let me give you a case in point. First off, here's the rule that I use to determine bad income. If the tenant performs under the terms of the lease, will I see that money show up in my bank account next month? Okay, well, he's got a pet and the pet lives there and he's going to keep the pet. So pet income, is that good income? Yeah, that's good income because people love their pets and they're going to keep that pet there. Late fees. I got behind, should pay for it. Sorry, blah, blah, blah. And now you see that's bad income. And that if the guy pays his rents on time next month, then guess what? We're not going to see that again. So that's an example of bad income. So you don't want to capitalize bad income. You only want to capitalize good other income. So that gives you an example of the categories and how we have to look out for it. So the first step are the dates. The second date are understanding the categories. And the third step is trends. You want to look at the trends. Easiest way to determine trends is to look at the bottom line, 12 columns of months, look at the NOI by month, and just follow your finger all the way across every single month. Do any months skyrocket in income? Do any months drop down in income? Whew. Okay, let's take a look at the expenses. Which category of expenses went up or went down? Look at the income month by month. Which months went up and which months went down? Why? What's going on here? If, for instance, one time my income skyrocketed by $25,000 in 1 month because I got a decoration fee from the laundry company when they signed a 10-year lease. Can you get that the next month? Can you get that the next year? No, you cannot capitalize that $25,000 because the next guy who buys a property may never see that money. So I'm not going to take $25,000 divided by the cap rate and pay the seller for that income. That's bad income, even though $25,000 bought me a lot of chitlins that weekend. So that's how you got to look at those trends. I was looking at a trailing 12 the other day. It was a hotel. So we're looking at the trailing 12 and man, there's something's just not right. Why did this year, why did the NOI drop by $200,000 in 1 year? Revenue looked the same, so it must not be a revenue issue. It's got to be an expense issue. Well, you look at it like, wow, look at these months. They're all the same. Oh my gosh. 4 months in a row, the expenses went up by $50,000. Okay, let's dig down deeper. Which line item increased by $50,000 each month? It was in the general and administrative category for security, management and security fee. What the hell does that mean? What did you have to pay $50,000 a month for 4 months on? That's crazy. So that put the brakes on that deal until we got a good answer on that. But that's how you have to, don't run away scared because a page is full of numbers. I'm telling you, folks, if you're looking to get in this business, it's a numbers business. You've got to become comfortable with that trailing 12 financial statement. It is gold. You learn so much about the property. I can look at a T12 and tell you exactly what a day in the life is like for that little old lady who's been working there for 20 years. And I can tell you just by looking at that financial statement, if we're going to let her go on day one, as soon as we take over the property, or we're going to keep her. I can tell just by looking at that, how well the property is being managed. And it's all in the numbers. So get a handle on that, learn about that, make it become just part of who you are and what you do. It's great stuff. I love looking at financial statements. They tell me so much about the property, whether I'm going to buy it or whether I'm not. But I can tell you just in a blink of an eye how well that property is being run. And that's how you have to do it too. My students who are on here, all of this stuff is in that, I think it's part 4 in the training of how to understand multifamily accounting better than your accountant. So check it out. It's good stuff.